Hey homeowners, so what is a buyer's Hey homeowners. Hey homeowners, so what is a seller's buydown? What's a 2-in-1? What is an ARM? Well, an ARM is an acronym for adjustable rate mortgage, and that's one of the tools, as well as a 2-in-1 and the seller's buydown, that will go into that are designed by mortgage companies and finances to help you. So we'll go over those in just a minute. I'm Brian Chandler. I'm with Remax Alliance here in Douglas County, Colorado. So you're looking to buy a home. You know that interest rates have gone up since last March. They have dipped just a tiny bit this last week. Don't count on the fact that you're going to see too much more dipping in the mortgage rates. Anyway, what we're dealing with is now mother of invention, of course, is necessity. And the mortgage companies are sitting there thinking, well, the Fed's trying to raise interest rates to help curb inflation, but we still want to make loans. That's our business. You're a home buyer thinking we want to buy homes, but we don't want to spend a fortune in monthly payments. So mortgage companies have designed some pretty cool tools. First is the seller's buydown. This is an option for the seller to actually pay your loan origination fee and points or costs associated with your loan.
Show me the money, show me the money.
So as an example, we had a $850,000 sale. The buyer could only afford a purchase price of $800,000 to have the payments where he needed to be to qualify. So he's like, I can't pay more than $800. Well, the seller says, what if I buy down your interest rate? And he's like, well, how's that gonna work? He says, well, the way it'll work is you'll get a lower interest rate for 30 years and I'll be able to pay for that buy down, but you'll have to pay full price for my house. So the seller actually paid $14,000 to cover the buyer's costs. The buyer's interest rates went down 1% for 30 years, and the seller paid $14,000. So the seller actually got $836,000, the same, greater than if he sold the house for $800,000, of course. And the buyer still has the same payment that he was going to qualify for if he bought it for $800,000. So it's kind of a win-win in a situation like that. So now we've got that covered with the seller buydown. 2-in-1. This is a tool where you start your very first year at 2% under the current rate. So let's say right now it's 5.25. Your first year payment will be set at 3.25. That's the payments you'll make for the whole year. The next year it will go to 4.25. So your payments will be based on 4.25. Third year, it will go to whatever the current rate is at the time you lock it in and make that loan, which is an example today of 5.25. The other would be a adjustable rate mortgage. Currently, and I'll put up a slide here so you can see, if you were to start, let's say on a $650,000 house as an example with 20% down. Now, of course, some of you aren't going to have 20% down, so the figures will change a little bit. But you would be able to start your interest rate today for 7 years, starting at 3.75. I'm sorry, 3.75. Right, and then it will go up over a period of 7 years to where the current rate is today, which would be 5.25. So an ARM, adjustable rate mortgage, is another tool that's available to you. And what that means is that the interest rate will adjust and the payment will adjust over time. I'm going to put up a slide to show you an example of a 7-year ARM that would start as an example at 3.75% interest, will go up periodically over the years for 7 years, and eventually end up to 5.75, which is when this slide was done. So you're looking at a increase of 2% over a 7-year period. Now, the nice thing about this type of adjustable rate mortgage is, one, there's no loan origination fee. So there's no 1 point, 1.5, 2 points, anything to get this loan. And there's no prepayment penalty. So let's say you get a loan that's an adjustable rate mortgage now, and you start your first year's payment at 3.75% interest. Better than the 30-year conventional, right? At this time, which is hovering about 5.25%. So you would start off, and let's say 3 or 4 years down the line, yes, the interest rate is going to go up, your payment's going to go up, but all of a sudden, the interest rates on mortgage loans starts coming back down. You can refinance, pay off that existing adjustable rate mortgage with no penalty whatsoever, refinance your property to whatever that rate is at the time that you're able to now lock in for 15 years, 30 years, whatever it may be. So I hope this information is useful for you and informative. I'm certainly here to help. And by the way, I do have a book that I have written for first-time buyers. It is Secrets to Gain an Upper Hand on Your Next Purchase. And this is complimentary, it's free, you just need to ask for it. I can drop it off, mail it to you. And I also have a digital version available at briansbooks.me. That's Brian's, B-R-I-A-N-S, books.me. So you can reach me at 720-808-1007. Once again, it's Brian Chandler, Remax Alliance in Douglas County, Colorado. So until next time, take care. Hope to talk to you soon.